let's start with looking at Asia. Those markets closed already. They were mixed despite upbeat Chinese data. Markets brushed off the better than expected Chinese GDP data as signs of uncertainty in the country's recovery still weighed a little bit on those Asian markets. In Japan, the Nikkei up 0.5%, the Hang Seng in Hong Kong down more than 0.5% though, and the Shanghai Composite Index up 0.25%. Over in the United States, major stock indices ended with very slim gains yesterday on Monday, helped by financial and industrial shares. Investors also braced for a heavy week of corporate results and comments from the Federal Reserve officials that could give more insight into the path of interest rates. The S&P 500 gaining 0.33%. Now, at the moment, let's bring it all together. Stocks around the world mostly higher this hour as investors have welcomed the news that China's economy grew faster than expected. So there seems to be some growing optimism around that. The JSE up by more than 0.5%. The rand strengthening on the back of a weaker dollar as well. And let's speak to Makwe Masilela from Makwe Fund Managers to look at the markets. Makwe, thank you for being with us as always. Firstly, I don't know if you were able to hear the CEO of Capitec. He said if you look at those impairments in context, it's not that bad. What do you think of their results today?
Totally, I think what they're doing that's been very responsible, but that does not make it the fact that Capitec is looking okay going forward, just like other banks. All these issues about interest rates that have been increasing at a very rapid rate, and I don't think we all anticipated that. Yes, their operating profit, before tax up 12%, their net asset value up 9%, their dividend, up almost 15%. That's excluding special dividend. The fact of the matter is that the whole banking sector, they stand to benefit when it comes to interest rates going up, but to get to a point where you start to panic, as we see what the likes of Capitec are doing, which is a good thing, to make sure that those impairments charges, they have to have provisions thereof. But my point is that interest rates gets to a point where they end up being harmful to the bank themselves, because the very same consumers will start struggling to repay whatever loans that needs to be repaid. And remember, Capitec, they operate mainly from the middle to lower LSM. Those are the people who really feel the heat when it comes to this high cost of living. These are the very same people who their very same salaries are not sufficient to cover them. Hence, they always have to dip into credit now and then to make sure that they survive for the whole month.
I like the way you put it as a tipping point of sorts. All right, let's look at the global data. The Chinese economy grew at 4.5%, better than expected. And that is significant for us, isn't it, given the huge export market that China represents?
Definitely, but remember, that was for the previous 3 months. The thing is, going forward, do we expect them to continue to grow? We're disappointed when they've set that target for the year to be 5%. As you said, that we need them to be able to grow with the likes of India to cushion the world economies from this possible soft landing, if not a mild recession. But yes, the market seems not to be too impressed, because look into the private investments. That they didn't move at all. Look into the youth unemployment, the second highest on record, and we know that they will still have headwinds going forward with rising interest rates, with this war in Ukraine. And hey, this might be just a blip after the guys have reopened. Remember, they were under very strict lockdowns when it comes to consumers not being able to spend. The question is, will the very same consumers continue to spend going forward? I think it's everyone's guess.
Yeah, you're raising concerns I've seen across the board about whether this recovery is sustainable. So you're saying this isn't taking a global recession off the table at all, and concerns remain about high interest rates and high inflation.
Definitely, and as we've seen already, we just had a banking crisis, a mild one, you can say that. In the US, we've seen, Switzerland, what has been happening with those banks, that definitely people are struggling. And anyway, people have now realized that it's even getting more difficult to get credit, and it's not only for consumers, that also includes businesses. And if you are not able to get credit as a household or as a business, that definitely is going to have a serious impact when it comes to economy, because you need to have access to that particular credit to be able to grow your company. And as you said, the Capitec CEO also mentioned that fact that they're becoming more strict when it comes to giving credit. So that in a way is going to have a negative impact on the economy. And anyway, the likes of IMF, anyone says that, listen, chances are we might have a mild recession or a soft landing. Soft landing, by the way, is not necessarily a good thing. It just means that we are trying to make sure the economy doesn't overheat. You are trying to get inflation down, but you are avoiding a sharp downturn, meaning you can still have an economy which is not growing, and still that's not good going forward.
Yeah, so basically a flat line. You mentioned the mild banking crisis. What do you expect then? It's Goldman Sachs and Bank of America reporting today.
I think they'll continue to report good results, because what we have seen, it was just a small blip and it just happened now. But now these guys are reporting for the whole quarter, and this issue was just only, which lasted for a month or two. I mean, a week or two. I don't expect that to have an impact when it comes to their results. The biggest thing will be going forward their earnings, because now they also have to adopt what Capitec have done to be more cautious going forward.
Very quickly, business confidence, was that expected another dip down? And despite that, the Rand a bit stronger, the JSE a bit stronger?
Yeah, it was expected. Remember, load shedding continues to impact us, and JSE we might say is stronger, but for the month of March, JSE was down a whopping 3.2%, so that had an impact as well. And also these interest rates which keep on going up, so I guess it was expected, but it's not too bad.
All right, thank you so much. Makwe Masilela from Makwe Fund Managers unpacking the markets for us today. We take a short break. I'll be back with more stories on Point.